Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, May 5th, 2009. Well, we're seeing a slightly lower day on Wall Street today on very, very light trading volume. We had a decent volume, day this morning, early in the morning, really from 9:30 to 10:30 a.m. But once we got into Bernanke's testimony, which really started on the 10 o'clock, 10 a.m. fringe line there, the market just died out. And Bernanke again testifying on really what's been going on, talking to Congress, to on Capitol Hill about the stress test, about the various situations in the economy, where he thinks things are going. And for the most part, he's giving some positive statements. Now, is that any surprise to any of us? No, of course not. He needs to force the market to keep these gains. The more they can keep these gains, the more likely the economy can recover as people feel more confident. And it's all about a confidence issue, whether or not they're going to go out and spend. At least that's what the goal is here. Now, you're looking at the intraday 10-minute SPY chart, which gives us a broad range analysis on the S&P. And what you can see really is the initial open, we gapped slightly lower off of that big squeeze into the close. And you can see the candle yesterday was just a huge candle on a little bit of a squeeze, short squeeze into the close. And we actually gapped lower today and recovered and did a gap fill. And that was a perfect shorting opportunity. We touched on that in the chat room as a good shorting opportunity right there at gap fill. The market ended up reversing beautifully off of that, coming back in. And now this blue line, which we had in our charts yesterday, for those of you that are our research center subscribers, our premium subscribers, can see that. And we talked about that a lot yesterday, how that would be support today. And it's worked out beautifully as support and then resistance. And I'll show you where we got that from. If you go all the way back to the 22nd of April, you can start your line right there. And you bring it right through the high of the 24th, all the way up through the highs of the 30th of April right here, and it actually coincides beautifully, and it was good resistance yesterday. You can see the market hammered on it all day, and then that squeeze took us above it. Well, today we hammered on the downside, 1, 2, 3, and then 4 on the fourth candle. Really on the fifth candle, we started to break it and fall down, but you can see how good support that was. Then on the reversal today, after we fell all the way down to the 50 moving average, and I want to discuss this a little bit in detail, because what you saw yesterday was the market hammer the 20 moving average. And those of you that have followed these videos, those of you that know trendline technical analysis that we teach and pride ourselves on, know that when the market hammers on a resistance area or support area, every time it hits it, it gets weaker. It's basically like taking a little bit of that power bar away if you're a video game player or so forth. But eventually you get down to the point where it's just too weak, and you essentially in a video game would die in that situation. But here you just break down. And the breakdown happens right here after hammering on the 20 moving average all day yesterday. See the 20 right here? And then finally it does it again today, and that's when you get the break. But where does it go? Right to the 50 moving average. 50 moving average all day yesterday was never tagged, so you know that's going to be a solid support line. What happens off of that 50 moving average? The market does bounce, very, very solid bounce. Where does it take us? Right up to the blue line again. So remember, resistance here, all day is yesterday's resistance until the close, breaks it. Now it becomes support. All morning, hammering on it until it breaks, which is support. And now all of a sudden, once you're below it, it becomes resistance again. Here it is again, hammering right there as resistance, and it falls all the way back down again here into current time frame, which is a little after 1 p.m. Eastern time as I do this video live for you all. So again, just notice there's a second hit now on the 50 moving average. Every time you hit the 50 moving average will get weaker, but it's still strong enough right now to keep it above. You can possibly look for a slightly bearish pattern off of this pattern. See the big green, big red candle inside bar, 1, 2, 3 inside bars. If you take out the high, then that would negate that bearish pattern. But for now, you have an in spirit of bear flag formation there off of that little bit of a red candle here on the charts. The market is upticking though, and the one thing you have to remember is, the volume. We've talked about how light volume is recently, folks, but today is just a perfect exemplary, view of that. As you can see here, here's where the market starts, and we have some decent volume in the morning, and then it just dies out. Look at these candles, folks. There's barely, you can barely even see them. They're so small in this intraday activity on the markets. Now, why? Well, obviously, we had Bernanke. Bernanke's testifying. The market really is just on pause, trying to see what he's going to say. They want to try and figure out what he's going to say. In addition, you have the stress test results that will be released on Thursday. Jobless claims, unemployment on Thursday. There's just going to be this middle of the week area where normally in a week we have a lot of volume in the middle of the week. This week we are not going to have that probably until Thursday for the most part. So keep an eye on that, folks. Just realize, and we mentioned this yesterday, in fact. We talked about a little bit of a bearish pattern yesterday in the intraday video I put out yesterday. But what we did say was that the light volume really does puts a real kind of kink in that wire, if you will, or a little break in that analysis. Why? Because light volume market psychology, if you put the two together, you'll generally 9 out of 10 times get a market that floats up. All right, doesn't always do it, but there's a high percentage in this market that we're seeing right now that the market will float up when there's no volume. Yesterday was a great opportunity for that to be seen. All right, same thing here. Granted, you have a bearish pattern developing off this big down move and sideways into slightly upper move. But again, look at the volume, even lighter intraday in the middle of the day here than yesterday. So that also lets you think that, okay, well, let's be a little cautious here. Let's understand the risks involved. And it's really all about analyzing risk. You have to understand risk. Every trade I do, every analysis I do is all about a risk assessment. It's understanding risk reward. Is the reward worth it? Well, in a light volume environment, generally, I would be on the sidelines of saying probably not worth it, regardless of the pattern formation, because of what we've seen lately. Now, you still have good resistances. Obviously, if you make a move up here, the blue line is going to be resistance. If you break that, the high of the day right up here would be good resistance. You'll even have a little minor level right here. All right, you can see this little pivot point where you bounced up again and then reversed. That should be a little bit of a minor resistance line right in there that you can keep track of. And that's, again, at about $90.75, $90.75. The high here is about 91. And then the blue line currently is approximately, current levels sit around $90.60, give or take. So if we do happen to make a reversal move on light volume, if somehow they can negate the bearish pattern that we see in the charts right here, then you'll see those levels get tested as good resistance. All right, so keep an eye on those. On the downside, let's talk a little downside. Assuming that this bearish pattern does play out, which it's down ticking a little now, but again, with the light volume, that means nothing to me. Trust me, nothing. If we tick down, you're going to have support at the 50 moving average right about $90.15 currently trading right now. If that breaks, then you're now looking at the lows of the day as next support right here, all right, which is at 89.90. And if you break that, then it looks like this pivot down here would be your next big one. There'll be a couple minor ones along the way. Obviously, I can see one right in here, somewhere between these two lines right in here would be a good one as well. But that's a more of a minor one at around 89.70. But the big one, again, to watch, if the 50 breaks, you're looking for 89.90. And then ultimately, if you get down to around 89.50 right down here, that would be a lot of support coming into play. So again, just to refresh everyone, the markets are trading slightly lower today, giving you an intraday update on technicals here. What we're seeing, again, we focus on price pattern and time and trend line analysis. That is our holy book. That is what we follow. That is what has served us so well of late in understanding over the last couple of years since we formed this company how to understand exactly how to read these markets, be on the cutting edge, get the newspaper from tomorrow today. That's what we were really out to get, to be able to find out what the next move is. And by the way, just a little update there, the hidden gems that was published on the website, folks, which is part of our premium subscriber service on over the weekend. Yesterday it ran 30%. Today it ran again a total of 60%, 66% move on that hidden gems in a matter of 2 days since we posted it on our website. So fantastic move, and that's part of the research center, which is you get the daily, nightly videos, research, daily market reports, pro trader watch list, etc., all those within that one service. So we do encourage you to come. Also, the webinar this weekend, folks, coming up on Saturday. Come join that. It's our methodology. We really go into how we do these calculations. We only tell you, in the research center and the videos how we're coming, what we think the market will do. Here we actually tell you how we're calculating that, a large portion of that, anyways. Okay, so market is down ticking again, guys. Really what you're watching here is the 50 moving average. Please be aware of that. 50 will be good support still, although it's weaker than it was after 1-2 hits now. And you can see you're actually starting to come down. So wouldn't it be nice even in light volume if the pattern finally played out here today on the downside? But again, keep an eye on that. Notice the light volume. Keep an eye on Bernanke's testimony. Also watch Thursday. This Thursday is going to be a big day for this market. Have a wonderful day. We'll talk to you soon.